You are listening to chartingwealth.com for Tuesday, the 8th of May, 2018. We see markets up for the day. That's both the S&P 500 and the NASDAQ 100. We see that 20-year bonds are down. Gold is up just a little bit. Let's jump into the S&P 500. And by the way, folks, we're in the worst time of trading in the year. We're entering the summer doldrums. Sell in May and go away. Do you really care about learning how to chart? If so, then this is when the real charters buckle down and go for the ride. It is not easy, not saying it's going to be easy, not saying we're going to find a lot of things to track and a lot of trades to make, but we work through it year round, because when the gold does present itself, and I'm not talking about GLD, I'm talking about real gold, real trading opportunities for you to practice, then of course we need to do it. We need to do our virtual trades, and we need to continue to track this market. You're not going to learn how to do this if you don't practice every single day. I believe 10 minutes a day is all we ask for, and let's stick to it, because those who persevere will achieve. Now, let's see what's going on the S&P 500. We see that the S&P 500, almost said 20-year bonds. Sorry about that. We'll get to that in just a minute. The S&P 500 started the week off up 0.33% for the day. If we look at the weekly chart, we see it's gone just about flat. Still looks like it's ticking down just a little bit on the price percent oscillator. Derivative oscillator has been continuing to lose momentum since really it peaked out with its bottom energy around the 2nd of March, and we see it continuing to contract. And again, we see the week starting off. The first day of the 5-day candle is a green up box, an open box. As we look at the 2-day chart, what do we see? Well, we see it ticking over, heading up as far as the price percent oscillator goes. Looked like the derivative oscillator gained a little bit of upward momentum. And of course, we see the first day of this latest 2-day candle, we see that it indeed is a green open box candle. Now, again, remember, our weekly chart is in a confirmed down move still. Until that crosses over, we don't have an up move trade. We will just continue to watch the 2-day chart and see when there's enough energy to pull that weekly chart over, or the 2-day may rotate over, crossover heading down in the same direction as the weekly. And then, of course, that would be a jumping in point. What's going on the 4-hour chart? Well, it crossed over in the afternoon on Friday, bumped up on Monday morning, and then withdrew a little bit in the afternoon. We see the derivative oscillator gaining energy, price percent oscillator heading up. We go from the S&P 500 to the second chart we always look at, the QQQ, the Qs, the cubes, however you might call it. It's the NASDAQ 100, the tech stocks, continuing to lose downward momentum on the derivative oscillator, price percent oscillator headed up. Hasn't crossed over yet, though still in a confirmed down move on the weekly. So far, we have a green open box candle that's forming. We had a green spinning top last week. We look at the 2-day chart. What do we see? Well, of course, it crossed over going up back on the 2-day candle and ending on Friday, the 4th of May, and went up pretty good, pretty substantially, 0.78% for the day on Monday. We'll see how that continues. Again, that's just the first day of the latest 2-day candle. See the derivative oscillator heading up, price percent oscillator heading up. Also, as we look at the 4-hour chart, what do we see? We see on that 4-hour chart, it actually crossed over going up back on, I guess that would have been the afternoon of Thursday, and some nice solid up candles, bumped up in the morning, and then pretty much tagged the same in the afternoon on Monday. Price percent oscillator heading up, derivative oscillator gaining upward momentum. That's where we are. Again, don't have a trade because the weekly's still in a confirmed down move. Problems you get this time of year where you don't have good solid moves up or down is you get a sideways slide, which typically means that our oscillators we don't have a lot of oscillation, so we don't have a lot of signals to get us into moves. In other words, when the market's herky-jerky, it's dangerous. And what do? We keep our powder dry until an opportunity presents itself. What do we see going on TLT 20-year bonds? Well, of course, we see pretty much a laminated price percent oscillator with the red signal line, derivative oscillator losing downward momentum. But again, we are still in a confirmed up move. We just don't have a crossover at this time. We have a sideways slide on that weekly chart. For the day, it was down 0.17%. We look at the 2-day chart. What do we see? Well, it crossed over going down back on the 20th of April, was down actually 2 more candles. So that's 4 more days, and then has been sliding sideways since then. The derivative oscillator is losing downward momentum. Price percent oscillator pretty much flat. So we've got the weekly heading up and the 2-day down until we have a crossover on one of them going in the direction of the other. We don't have a trade on TLT. What do we see going on the 4-hour chart? Of course, it crossed over going up back in the afternoon on Friday the 27th of April, went up for another day and really has just been sliding sideways since then. So again, friends, a lot of indecision that we see in the market, and we're waiting for things to sort out. And until they sort out, we keep our powder dry. Is it the most exciting time to trade in the market? No, it's not. But at the same time, doing what is right is what's supposed to satisfy you, okay? Losing money is the worst thing you can do, the absolute worst. The next worst is not making money. The best thing you can do is, of course, to make money. But again, we don't want to lose money and have to make it up. We want to make sure every dollar that we've saved and scrimped and put into our virtual trading account stays there, and that we add to it, not subtract from it. That's for the dummies. Okay, now we leave TLT. We go to our last chart. We see gold up 0.03% for the day, just barely up. So far, the first day of this latest week, this latest 5-day candle, we have a green open box up candle on gold with, it's really hard to see, looks like a little wick on the bottom maybe. We see the derivative oscillator continuing to gain downward momentum as the price percent oscillator is also, after those 2 prior weeks of sharp down moves. Remember, we're in a confirmed down move on the weekly chart on gold. What do we see on the 2-day chart? Well, it flattened out on that last solid full 2-day candle that did on Friday the 4th of May. And so far we have, again, sort of a sideways slide. What looks to be a doji at this point means lots of indecision, tending up, but we're still in a confirmed down move on the 2-day chart. Price percent oscillator heading down. Derivative oscillator losing just a wee bit of that downward momentum. Again, with that small little up click of 0.03% for the day. And as we look at the 4-hour chart, of course, it crossed over going up at noon or in the morning on Friday the 4th of May. And of course, that afternoon, it was up on Friday and up both in the morning and the afternoon, pushing through the 2-day trend line. We see the derivative oscillator gaining upward momentum, price percent oscillator heading up. So we continue to keep our eye on things as far as gold goes. I'd love to see gold start tracking better. We did have a beautiful, if you would have traded the 4-hour chart for the first time in quite a while, not that we recommended it at all, because it's been quite lackluster of late, but that 4-hour chart did work quite nicely, starting back on the 19th of April in the morning, going down on a nice down trade all the way until about the time that it crossed over, heading up in the morning on Friday the 4th of May. So quite a nice drop there in gold if you were doing an inverse trade, but we've just not been able to count on this 4-hour chart lately. Remember, it was a total trading chart for a good 1.5 years or more. It would go out occasionally, but then would jump right back into things, but gold has to be trending. And when it's not trending well, as we said, these oscillators don't work well. We like trending markets, markets that are moving places. And maybe gold will be doing that again for us. We'll just wait and see. Because at this point, we have the 4-hour chart going in one direction, and we see, of course, Our weekly chart is also going in that same direction, but the 4-hour chart is in that pullback. And if indeed it continues to track up, we will wait for a pullback and perhaps it will cross over going down unless it pulls the 2-day chart in an up move, which of course would ruin a potential down play for us, but we'll keep our eye on things. Maybe gold is not going to just bottom out here at 123.80 or so and move up from there. Maybe it will roll back over and start heading down, and if it does so, my friends, we will jump in it and do that down play. That's where we are, folks, as we end the day, so keep your powder dry. The next trade we might have could be in a down move in gold. We will let you know as soon as we see that setting up. Be sure to fill out your daily market worksheets each and every day. And if you find a practice trade you want to do, fill out that trade worksheet. And don't forget, we have those trader journals available for sale to you. If you buy a year's worth, you get 15% off, and you can pre-order our book, Charting Your Way to Wealth. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters.